Hi creatives, it's Claire from Right Account and it's June, which means end of financial year, which means you've got it. We're going to start talking about taxes and end of financial year. And in this first week, I want to talk a little bit about savings for tax and where those savings are. So really, is your business covering the income tax that you need to pay on the profit or earnings in the business? And I'll give you a hint, it should be. It really does need to be. Now, when you're an employee of a company, tax really is something you probably only think about once a year. The company pays the tax before they pay your salary. And officially, we call this pay-as-you-go withholdings, or PAYG-W. When an employer withholds the tax portion from your salary, they pay that directly to the government on your behalf, so mostly tax is taken care of until it comes to submitting your tax return. But when you become a sole trader or self-employed, we need to take a different approach because no one is taking care of the tax for you. So firstly, we have to realize that all the money that comes into the business includes a portion of tax. All the money that comes into the business includes a portion of tax because we have to pay tax on the profit portion of the business. And I'm going to assume that all the sales you make in your business have at least some sort of percentage of profit associated with them. So if every sale you make has profit in it, then every sale you make also has a tax obligation. So paying tax really is one of the jobs that the money in your business needs to do. So as a sole trader, we have three options on how we deal with tax. The first one, probably the one that seems the most appealing but can get us into a little bit of trouble later if we're not careful, is to withdraw all the money from the business. So you take all the official profit and all the surplus cash from your business and you pay it to yourself as a drawing, which is completely allowed as the sole trader, the owner of the business. Then at tax time, you need to pay the income tax, it is your personal income tax, from your personal accounts because you removed the tax from the business that came in with each sale. So if we quickly just follow the trail of money, the money comes into the business, let's say $250 from sales, we pay expenses within the business, let's say they're $50, and then we withdraw $200 from the business, then we've withdrawn the profit and the tax associated with it. The second option we have is to withhold the tax in the business, and I call this kind of the withholding. So rather than paying out everything, we keep in the business some cash, some of the profit, and we use that account to pay the tax bill when it comes in. So then come tax time, there's money in the business that's set aside for this purpose because you saved it in the business rather than paying it out to the owner. So we go back to that quick trail of money. Income from sales, $250. Expenses in the business direct, $50. Then we have to estimate how much tax. So let's say $45, which leaves us $155 that we can withdraw from the business as a drawing as the owner. Seems fairly straightforward also. Then there's the last option, and this is not something necessarily that's an option if the ATO subscribe you to it, but there's an equivalent scheme for businesses and sole traders that mimics this, the PAYG withholding, and it's actually called Pay-as-you-go installments, or PAYGI. So effectively the ATO estimates the amount of tax that as a sole trader you would pay by the end of the year. And then they split that amount into 4 equal installments, and you were required to pay that to the ATO with each quarter. So we're talking October, January, April, and July for quarter 4. So entry into the scheme is either determined by the ATO, and you really have no choice, or there is a voluntary option if they've not registered you yet. So the amount the ATO estimates is determined on your previous tax return with a small increase for CPI. And the ATO will contact you if they register you into the scheme. This is not something that's going to be a surprise that they're just going to pop up. They will tell you that they have enrolled you, and then it's not optional to pay it anymore. So if you are good at managing cash, I probably wouldn't recommend that you need to register voluntarily. Just set aside the amount for taxes either in your personal accounts or in your business. Either's fine as long as you're aware of what that is and what its purpose is. However, if you are good at paying bills progressively, paying things down, and that makes you feel good, then voluntary registration may be an option for you, but please discuss this with a tax professional first. So Now we understand what the options are. Well, what are the next steps? The next step is determining how much you need to save to pay the tax you expect to pay. So you're probably thinking, well, it's June now, so it's probably a little bit late to start saving for tax. And yes, for the current financial year, I totally agree with you. So for 2019-2020, it's probably a little bit late to start saving for tax now, but it is the perfect time to start putting into place a system for the 2021 tax year. So the first step, you will need to estimate how much income, expenses and profit there will be, so you can work out how much tax you will need to pay. So 2021 may be a little bit of an estimate, a guess number, but if we do this assessment now, we will get a really good idea because we have a really solid number for the 2019-2020 financial year. So we still have until, October or even May if you use a professional to do that. So there's still time to make those savings. You'll have a really good idea of the tax for this financial year and a pretty good idea of tax for next financial year. And so if we start to use percentages, we can get even closer. So next week I will talk about how we come to that estimate, what the numbers we need to run are, and what the considerations are for tax that we will pay beyond just straight income tax. But I will say, if you do need somebody to help you go through this for your business, advice is all fine and well, information's great, but if you want somebody to really help you implement this in your business, please reach out. I have a special offer on at the moment, special new program called the Money Management Makeover, and we go through this exact system, but with your exact numbers. We gather the information on your business so you can get a really good estimate and you can get somebody to help you and guide you through the process. If you've enjoyed this video, I really do appreciate likes and comments. If you have questions, please always just let me know. And otherwise, I hope to see you in another video.